All right, today we're diving into a really big question that's reshaping how companies think. Is shifting to a stakeholder model a brilliant strategic move, or is it just a massive logistical headache? We're going to break down the real-world trade-offs, so let's jump right in.
First, just a quick heads up. This is part 9 in our 10-part series, and it's all based on a really comprehensive report from Virtualization Options LLC. We're just scratching the surface here, so please remember, this is not legal advice, and it doesn't come with any warranty.
So, that brings us right to the heart of it. Moving to a stakeholder-centric approach, well, it's a huge undertaking. There's no sugarcoating it, which leads to the big question, is it actually worth all the trouble?
To even begin to answer that, we really need to grasp the sheer scale of this change. We're not talking about just updating emission statements or rolling out a couple of new company policies.
No, this is a ground-up overhaul of how a company is governed, how it sets strategy, and how it operates day to day. It really forces you to weigh the very real, upfront challenges against some pretty compelling long-term rewards.
So let's start with the cost side of the equation. What are the major hurdles that any organization thinking about this really needs to be ready for?
The source material really boils it down to 3 main obstacles. First, there's the incredibly tricky act of balancing everyone's interests. Second, your governance structure just gets a whole lot more complex. And third, well, the costs go up.
So this first challenge, it's all about trade-offs, right? A decision that's great for your employees, say a big pay raise, might mean prices have to go up for your customers. Or investing in new green technology, which is awesome for the environment, could mean lower returns for shareholders in the short term. It's a constant juggling act.
And that leads directly to the second hurdle. To manage all these competing interests, you can't just wing it. You need a much more sophisticated way of running things. We're talking new skills, new processes, new systems, all designed to bring these different voices to the table effectively. And frankly, most companies just aren't built that way from the start.
And finally, let's talk about the money, because this stuff isn't free. You have to invest in actual systems for engaging with stakeholders. You need robust ESG reporting. That's for tracking your environmental, social, and governance impact. And you need people who can keep up with all the regulations, which are changing all the time. These are real, tangible costs that hit the bottom line.
Okay, so after hearing all of that, you might be thinking, why would anyone bother? Well, this is the turning point. The source report is very clear on this. While the hurdles are absolutely real and substantial, the payoff on the other side more than justifies the effort.
So, let's flip the coin. Let's look at the benefits side of the ledger. What's the long-term payoff that makes this whole difficult journey worth it?
The research points to 4 huge strategic benefits: a much stronger corporate reputation, way better risk mitigation, deeper trust with everyone you deal with, and a clear path to truly sustainable growth.
Let's dig into that a little. A great reputation for being socially and environmentally responsible, that's not just fluff, it's a magnet. It attracts top talent, loyal customers, and forward-thinking investors. And by constantly talking with your stakeholders, you basically get an early warning system. You spot problems before they blow up into full-blown crises, which makes your company incredibly resilient.
Next up is trust, which becomes one of your most valuable assets. It builds an almost unbreakable loyalty with your customers, your employees, and even your suppliers. And this foundation of trust is what allows for sustainable growth, because your whole organization is now in sync with where society is heading, not just where the market was last month. And here's the critical part. These benefits don't just exist on paper. They translate directly into a serious competitive advantage in today's market.
Think about it. The stakeholder model becomes a powerhouse for winning where it counts. You start attracting the best talent, especially younger people, who demand that their employers' values align with their own. You attract investors who are looking beyond the next quarter, and you build a customer base that will stick with you through thick and thin.
And the data really drives this home. The research shows that companies who commit to this are far more likely to see big improvements in innovation. Plus, they tend to face fewer legal and regulatory headaches down the line. It's a true win-win. So this all brings us to the final analysis, and it really comes down to a choice for leaders. How do you see this massive transformation? Is it a burden you have to deal with, or is it an opportunity you can seize? And here it is, the core takeaway from all this research. Your success hinges entirely on your mindset. It's about seeing this not as some painful box-ticking compliance chore, but as a strategic opportunity to build a stronger, more resilient, and genuinely future-proof organization. So I'll leave you with this final question to chew on.
Is your organization building for long-term resilience, or is it just chasing short-term returns? Because the answer to that question might just determine its entire future. Something to think about.